You think you're a player, but you're actually the product. Open your phone. Look at your stock app. The red arrows, the green arrows, the breaking news banner flashing across the top. Fed chair sneezes, markets tumble. Tech CEO tweets cryptic emoji, crypto moons. You feel that? That tiny spike in your chest? That little squirt of cortisol? That isn't market insight. That is a biological exploit. We are told constantly that knowledge is power. That the guy who reads the Wall Street Journal cover to cover, watches CNBC all day, and has 12 monitors on his desk, that guy wins. We assume that more data leads to better decisions. It's a lie. Actually, it's worse than a lie. It's a trap designed to transfer money from your bank account to theirs. Here is the brutal statistical truth. In the financial markets, for every one piece of legitimate, actionable data, a signal, there are 10 pieces of garbage designed to trigger your fight or flight response. That is noise. And right now, you are drowning in noise. And it's making you poor. Let's strip this down. No finance jargon, just cold, hard survival math. In World War II, the military had a problem. They had radar operators staring at green screens for 8 hours a day, trying to spot German bombers. They developed something called signal detection theory. The operator sees a blip. He has to make a choice. If it's a bomber and he flags it, that's a hit. Good job. If it's a bird and he ignores it, that's a correct rejection. Also good. But here is where it gets messy. If it's a bomber and he misses it, miss. People die. If it's a flock of birds, but he panics and scrambles the fighter jets, false alarm. You waste fuel, you waste time, you fatigue the pilots. Now, take that framework and apply it to your money. The financial news industry, and I mean all of them, has a business model built entirely on generating false alarms. Think about it. If CNBC came on air and said, "Nothing important happened today, just keep holding your index fund," they would go bankrupt by Tuesday. They need you to scramble the jets. They need you to click. They need you to feel like the world is ending at 9:30 a.m. and saving it by 4 p.m. So they take random variance, noise, and dress it up as a trend. They turn a flock of birds into a squadron of bombers. And you react. You sell the dip. You buy the top. You churn your portfolio. And every time you click trade, the house takes a cut. Now you're smart. I know you're smart. You're watching this, which means you like deep dives and analysis. And that is exactly why you are going to lose. This is the high IQ trap. Smart people, high-functioning people, we have high sensitivity. We are good at pattern recognition. We see connections everywhere. In engineering or medicine or coding, this is a superpower. You see the bug in the code. You see the symptom in the patient. But in the market, it is a death sentence. Because the market is 90% random walk. It is chaos. But your high IQ brain refuses to accept chaos. It demands a pattern. So you look at a chart. You see a head and shoulders pattern. You read a headline about interest rates. You combine them. You feel like Sherlock Holmes. Aha! The market will crash on Thursday. You confuse sensitivity, seeing everything, with accuracy, understanding what matters. You have low bias control. You react to everything. You see a headline. Inflation up 0.1%. Your brain? Sell everything. You see a tweet. New AI chip revealed. Your brain? Mortgage the house. You are a radar operator who is scrambling the jets every time a seagull flies past the screen. You aren't investing. You are hallucinating patterns in static. And the algorithms, the ones run by BlackRock and Renaissance, they are eating you alive. Because they don't feel fear. They don't read the headlines. They just hunt for the math. So how do you stop the bleeding? You don't need better sources. You don't need insider info. You need a signal processing system. You need to become deaf. If you want to survive, you have to invert your behavior. You need to artificially lower your sensitivity. You need to widen your filter so that only the massive, undeniable trends get through. Here is the rule. If it's on the news, it's too late. By the time a piece of information reaches the breaking news banner, it has already been priced in by a fiber optic cable in New Jersey 3 milliseconds ago. You are reacting to the echo of an explosion that already happened. A signal processing system looks like this. 1. Kill the feed. Delete the apps. Unfollow the market gurus. If you check your portfolio more than once a month, you are gambling. 2. The 3-day rule. If a piece of news makes you want to trade, wait 72 hours. If it was a real signal, it will still be true in 3 days. If it was noise, the panic will have faded. 3. Mechanical filters. Stop using your gut. Your gut is an emotional idiot. Use rules. I buy every month on the 1st. I sell if the asset drops 15%. No thinking, no feeling, just execution. The market rewards patience, but it sells excitement. You are paying for that excitement with your net worth. The guy with the most monitors isn't the winner. He's the victim. The winner is the guy who checked the price once, bought the asset, and went for a walk in the woods. Stop trying to find the signal in the noise. Shut it off. Step away. Let the radar screen go dark.